Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the most recent price action and what we think is likely to happen next. And as I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not consider subscribing? You can of course unsubscribe later. And if you haven't yet joined us in Discord, guys, you are missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into this one. I'll try to keep it as brief as I can whilst still conveying all the important information I think you need to know. And just note that I'm not a financial advisor. I cannot give you financial advice. All I can do is give you my thoughts and opinions on what I think is going on personally. So yeah, let's get right into it. So we're going to start here just by reviewing the thumbnails. And we obviously were expecting a move to the downside, which we've seen. We still expect this, but yesterday we did say that we were expecting $30,000, simply just because it was a theoretical blocker, and it was kind of a few indications in the data that was saying that this is a likely move. But at the same time, it didn't look like it was going to be a natural move. So we did this 10 o'clock yesterday morning, and we can see that we did actually move up. We moved up to $30,036, and then we had that rug pulled from beneath your feet. So a bit of a bull trap. It was quite obvious if you're really following the data that we were going to see this significant drop after we had that surge upwards. And we can see here that yeah, essentially we came down to this low. This was 27,235, and then we've bounced back up again. So we can see that we were pretty reasonably correct yesterday, which is good to see. And it was actually much quicker than I thought it was going to be. I thought we were going to just come down a fraction more here before we had that move to the upside. But it looks like the market makers, the billionaires, they wanted to kind of just trap out people much sooner. Okay, cool. So let's come down. We're going to take a look at smart money, but we'll also take a look at the Elliott wave. So we'll start here with the Elliott wave. Now, I tidied this up a lot since yesterday, so it was getting very, very messy down at the bottom here. Now, there's lots of different ways we could approach this one to try to articulate exactly what we think is going on. And I don't like this area over here overly. I still like it as an irregular flat correction, and I think we are in some kind of larger macro movement. Okay, so I tidied this up to try to make it as clean as I can to try to explain what's going on, at least in my opinion of what is going on. So I still look at this area here as an irregular flat, but that C wave is far too large. It's not a great representation of that. So there are some other options for us to kind of look at and ways that we can kind of make sense of this move to the downside here, just where it peaks down a little bit lower than this fifth wave movement. But for now, I'm going to leave it clean like this until we have more data to know exactly the structure that is going on here, because the way that I had this yesterday was obviously clearly incorrect, so apologies for that. Even though we knew that there was going to be a move to the upside and we were going to get that break to the upside, it didn't really give us a clear idea as to when that was going to happen. So I think for now it's probably best to leave this one as it is with this structure, and what we'll do is we'll assume that this area here, this peak, is going to be one of two things. Okay, it is either going to be a B wave, okay, or it is going to be a wave 2. Okay, it's one of those two situations in this opinion right here. Okay, now it's really hard to know exactly which one of those it is until that starts to emerge, right? Now, as I said, there's a couple of different ways that we could kind of think about this structure. We can think of this structure as a wave 1, wave 2, wave 3, wave 4, wave 5 truncated. And in which case, if that is what is going on there, then we have a high probability that this, in fact, is probably a wave 2 situation. So it's important that we kind of reflect on what that might mean, okay? But as I said, I'm going to leave that off for now. So knowing that we have this peak here, the minimum expectation that I would have would be to take this whole 5-wave structure here and move this fib over to the peak here at 30,036. And then we can see that there is going to highly likely be some kind of movement to the downside here at 26,740. Okay, so that's going to be idea number 1. Okay, so we're just going to go ahead and just, yeah, I'm going to move it over here to the left-hand side, just so we can keep those numbers and so we can kind of make sure we know what they are. The other way of looking at this is to actually zoom in on this most recent movement here, this volatile movement that kind of liquidated a lot of long positions. We can see right in here, and I'm just going to check that high was 29,480. So that's pretty close to it. And here you can see that this one would be a 1-to-1 ratio down here as well. And it actually pretty much is exactly falling in line. It's slightly smaller on the lower target. So let me draw these in, right? So we have a low target on the 1.236 at 26,119. Okay, so that's going to be kind of like the lower end target there. Let me see if I can adjust that in a second. Actually, let me just see if I can get that on the line. There and then up here, okay, to 26,730. So that becomes your kind of three-wave structure in here, if it remains a three-wave structure, because it's possible that it isn't. It's possible that this is actually something deeper than that. Okay, so that would be our minimum expectation there. And of course, we have our minimum expectation on this side, which you can see overlaps with that one. So they both pretty much come aligned to each other. Now, the reason that I think that that's our minimum expectation is that it's a three-wave structure, but this could be a five-wave structure, okay? And one of those things that we need to consider here is that maybe there's a big kind of wave 1, wave 2, wave 3 situation going, which will take us much, much deeper than what is seen on here. So for that to kind of be mapped out, we'd have to get a good bead on what is going on here. It's very clear that this area right in here is impulsive. Okay, we can see that. Very impulsive, it drops straight down. So what we're going to do is we'll take this to a 15-minute, and you can kind of see the structure right inside here. So let me go ahead and grab my wave 1, wave 2, wave 3, 4, and 5 like this. So you can kind of see how we have that five-wave structure right inside there. Okay, we can see that there is a diagonal at the front end here, and we can see it's a pretty clear drop down there. Now, if I take it to a 5-minute chart, you can see that even clearer. And actually, that wave 4 is a little bit higher here, and that is in there. And you can see that we had that straight drop. So diagonal going into a wave 2, into an impulsive wave 3, up for wave 4, down into a wave 5. Okay, so it looks pretty decent. Now, if I had to bring this back up into our hourly chart, like I said, one of our minimum expectations is going to be to come down into this lowest, because we'd look for a zigzag pattern. A zigzag pattern is the technical term for an ABC, or the common name of an ABC, and it will basically be a 5-wave down, 3 waves up, 5 waves down. Okay, so that's kind of what we'll be thinking about in this little range here, but you can see the size of this in comparison to this 5-wave structure. It's pretty deep, and if we are to be thinking about nesting down a particular kind of impulsive structure, then we'll be looking for a 5-3-5-3-5, essentially in this really long wave 3 that would be over here. Okay, so this is a possibility that we need to consider. We don't want to kind of just fool ourselves into thinking, you know, that that isn't a possible scenario that unfolds here for Bitcoin. And we would be looking at 24 to 25,000. So basically around the 24,800 and 70-ish level is going to be that 1.618. I'll see if I can get the exact number here so that I don't have to kind of guess or anything like that. What we'll do is we'll pull this down to that $36 level, and I'll get it exactly to the penny because that's where it happened on Binance. So we'll do that. So our 1.618 is this level right here at 24,864.68. Okay, so if we hit this number or go lower than this number, that is considered a wave 3, as long as it has a 5-wave structure to it. Okay, then we can have a wave 4, then we can have a wave 5, and then all of a sudden we can see ourselves with a very, very bearish situation unfolding for Bitcoin. Okay, so we need to be a little bit cautious. I'm going to just give this a label. Here, I'm going to give it a label of the 1.618 right inside there. So that's our wave 3 situation, okay? So we can see that there, then we'd retrace and then we'll drop back down. So this particular structure that's emerged here is quite important to us. It's important to us to understand what could potentially happen here. Now, what about invalidations? What levels do we want to be aware of that are going to be concerns for us? Well, straight off the bat, we shouldn't be peaking up higher than this under this structure. Okay, so we shouldn't peak up higher than our wave one origin. So 30,036 has to hold in order for this structure here to be valid. Now, it doesn't necessarily mean that it's completely wrecked. This particular structure would actually have several different levels of what I would call invalidation. Okay, so the first one that we'd want to be considering is going to be the 30,036. The second areas that we need to be considering is going to be up here a little bit higher. And I'm going to remove, actually, no, I'll leave it on there for now. There's actually three areas. So we have the 30,036, that's the first one. Then 30,485, that's the second one there. That's actually the peak of this wave one up here. Wave two on this macro scale shouldn't cross this level, right? And then, of course, we have that higher one at 31,000, okay? So those are the three kind of major levels. If we want to break this structure to the downside, we're going to be wanting to break all three of those highs. Okay. Likewise, if we come down lower, it's kind of confirming the structure, and we'd need to just make sure that it's got the right internal counts to be valid. And so let's move over into smart money concepts, right? What do smart money concepts tell us? Well, we had our fair value gaps, and we were talking about coming up and filling it, and well, that's what we went and did yesterday. We didn't just tap into it; we went straight above it, and then we came down. And this is because the whole entire thing over this side, you can see this red candle here, left this gap behind, this imbalance in the order book. So we knew that at some point we were going to move up here, and the structure was encouraging because it looked like we were going to go wave one, wave two, wave three, and so forth, right? And so it was obvious to us on the channel that there was a high probability that we were going to revisit this area. Not only were we in oversold positions and we were looking for a bit of a relief rally, but we also had the fair value gap. And that's exactly what happened here. We basically moved up to our fair value gap. So I can remove that now. We don't need to see it. Now, there are some people who will be looking and thinking positively about the market right now. They'll be thinking and maybe saying, look, we're in a fantastic position. It's a cup and handle. And I will just say that no, that isn't what's going on here, just simply because of the rules of a cup and handle. So a cup and handle would be something that a lot of people would maybe be thinking about here because we kind of have this arc to the upside. They're probably getting themselves excited by thinking about this. However, a cup and handle's handle shouldn't peak more than drop down more than 50% of the actual cup itself, and you can see here it is significantly lower, and so it's not a cup and handle pattern, so we can park that idea right away. So what else is going on here that could be a little alarming? Well, I guess you could maybe try to make it inverted head and shoulders, and I don't think that's a great fit either. Is there a head and shoulder pattern? Yeah, that's probably a better fit. So if I were to go ahead and throw in a head and shoulder pattern here before we start talking more about the smart money concepts. Where are you? Here. So you'd have your left shoulder here, head over here, and right shoulder over here. Okay, you can kind of see it like this. It's not perfect by any stretch of the imagination, but it does kind of fit and work in there, which means you'd get a break of that neckline being about 27,146, and then, yeah, it should be straight down from there. Again, one possibility. Not really something that I like to look at. Again, Elliott Wave theory kind of maps all those structures for cup and handles and head and shoulder patterns inverted or otherwise pretty easily. So smart money concepts, on the other hand, shows us a bearish structure, still in a bearish structure, even though we had this relief rally to the upside. We are above the 50 and 200 EMAs, and we're just above the equilibrium. We still have a strong high and a weak low, so everything there is gearing up still for that move to the downside. We will be looking at losing this equilibrium, in my opinion, and there is a small fair value gap here that we also have to take out as well. There is also a bearish change of character at a smaller time frame just inside here. That one is actually still valid, and this relief rally to the upside is kind of expected as part of that. We'll look for those minor breaks of structure as well, but for the most part, everything here is still very much bearish, and there is very little to kind of get too excited about at the moment. There's a small fair value gap at the top there. I don't expect us to hit that anytime soon. I think that'll be a much later stage that we'll come back and wipe that one out. Ultimately, there are some fair value gaps still that are yet to be filled on the way to the downside, and I expect that a big five-wave structure would take out a lot of those if that were to unfold. Ultimately, though, everything's pretty much aligned to Elliott Wave theory from a smart money concepts by the looks of it. We are in a bearish structure. We have confirmation of a bearish structure. We have weak lows, strong highs. Although we are above equilibrium here, I don't expect that to hold very strongly. We can see that we did fill this fair value gap. It's not perfect though. There was a small kind of gap left behind between these two key levels. It's a small slither. So at some point I do think we'll have to come back and grab this but it's not a major one. Ultimately, that big fair value gap was pretty much nailed here, but we did leave that little tiny sliver just there behind in a very similar way that we did up here with previously with that one. But yeah, for the most part, I do think there's a move to the downside to be had here for BTC ultimately on these micro movements, but I think it's going to take some time to play out. I could be wrong on that. We saw pretty quick moves yesterday, but I'm expecting a little bit more of a slower burn today. Let me know what your thoughts are in the comments below. If you found this useful and informative, smash that like button. If you're new to the channel, then why not subscribe? Don't forget to join us in Discord, and guys, I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to risk your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.